I think it's always a good time, right? Because according to my hero, Warren Buffett, he advised us not to time the market. If we are talking about short term trading, I felt that the market is a little bit too high right now. So it seems to be a lot of volatility. And that's why we do see some market pulling back forces happening. So if you're looking at short term trading, you need to be extra careful during this period of time. But if you're looking for long term investing, which is what I do for 80 to 90% of my portfolio, then there's no need to time the market. If you only want to invest in a company that you're willing to hold on to for 10 years or even more, right? Because you do need time for the company to perform. And if you want to get rich, it's the time that will do the magic for long-term investing. So what kind of personality is it for long-term investor? Firstly, you need to have a lot of patience, and you really don't mind, especially if you are picking individual companies, individual stocks, you really don't mind spending time to read those annual reports, financial reports, and just to stay up with the latest happening of the company.
We are excited to learn from you. So let's jump to it because there's so much that we can learn from you. The people who are watching, they are excited as they watch this. Since it's already Burr months, latter part of 2024, my question is it still possible to get rich from trading and investing? Also, if you are a beginner, what will you do towards financial freedom?
That's awesome. I absolutely love the first question. Uh, I think for myself, in terms of whether is it still a good time to enter the market, I think it's always a good time, right? Because according to my hero, Warren Buffett, he advised us not to time the market. So if you are talking about long-term investing, absolutely any time is a great time. In fact, the best time is always yesterday, right? However, if you cannot turn back time, it's always good to start right now. So if you look at the stock market for the past, just talk about the S&P 500, which is the US stock market, every single year for the past 50 years, the annualized return is about 10%. So regardless whether you enter last year, this year, or like 10 years ago, right? If you just keep on buying into the stock market and you start to accumulate that every single year, you are growing your wealth and compounding it at about 10% return per year, which I think is pretty decent. And then at the same time, if you are talking about short-term trading, this is where you do need to monitor the market a little bit more, especially if the shorter is your horizon, the more monitoring activity that you need to do. So if you ask me whether is it a good time to start trading, I would say, yeah, sure, why not, right? It also depends on whether are you taking the bullish trade, which is you're long in the market, or you're looking at shorting the market. I think recently, if we are talking about short-term trading, I felt that the market is a little bit too high right now. So it seems to be a lot of volatility. And that's why we do see some market pulling back forces happening. So if you're looking at short-term trading, you need to be extra careful during this period of time. But if you're looking for long-term investing, which is what I do for 80 to 90% of my portfolio, then there's no need to time the market.
Right. Very, very, very insightful. I have a question since you mentioned short-term trading, long-term trading, and there are some people who are watching this that what's that? What's the difference? Is there a certain profile that best suits for long-term trading and a certain profile that best suits for short-term trading, or can you do both?
I think, firstly, I love how you phrase the question in terms of the suitability, because you want to make sure you carry out your investment style that suits your personality, right? Your risk appetite. So when I'm talking about long-term trading, which, like Warren Buffett is the champion of that, right? That he always advocate, if you only want to invest in a company that you're willing to hold on to for 10 years or even more, right? Because you do need time for the company to perform. And if you want to get rich, it's the time that will do the magic for long-term investing. So what kind of personality is it for long-term investor? firstly, you need to have a lot of patience, and you really don't mind, especially if you are picking individual companies, individual stocks, you really don't mind spending time to read those annual reports, financial reports, and just to stay up with the latest happening of the company, right? But the good thing about long-term investing is once you understand the company, you do not need to spend that same amount of effort every single time. Because imagine, for example, right now you are trying to understand this company called NVIDIA. And once you study NVIDIA enough for the first time, you will roughly understand what is the business model going to be like, how much money does it make, what is the expansion plan the company intends to have. Then the next time that you read, you can skip all this because you already know it. You just need to have the latest updates, right? So that is the advantage of a long-term investor. You do that work first, and then eventually you can reap the rewards accordingly, right? So that is a long term in terms of like at least 5 years or more kind of horizon. And on the other hand, if you're talking about short term trading, then we are looking at as short as it can be even just 1 day, right? Because there's also day trader who literally just go in and out of the market every single day. That is the very short term time frame. Of course, you can also go slightly longer, for example, a couple of weeks kind of trade or a couple of months kind of trade. So for myself, apart from long term investing, I also do my short term option trading. So for options, I do that kind of frequency that is still suitable for me, which is about once a month. So I will enter and exit my options position once a month, not too active, not too short term, but at the same time, by doing so, I can also generate monthly income. So that's what I personally do. I combine long term for investment as well as short term through options.
It's good that you know what's best for you, that you combine the long term, you combine the short term. Are there instances where like it can be really stressful for you? Where are you stressed the most, the long term or the short term activities? Because especially in the short term it can be really like you can be in panic, especially, oh, what happened, what's happening?
Yeah, I absolutely agree. And just like what you said, regardless what kind of investment styles that you adopt, there will be potential risk involved. And if you cannot manage the risk well, that's where the stress actually comes in, right? So I still remember there was one period of time that I was investing very heavily in one of the Chinese stock called Alibaba. I'm very sure a lot of you guys are pretty familiar with the company, right? That Jack Ma was very famous, very charismatic, and the stock price went up so quickly within like a short 1 year. But then after I bought it, right, based on the analysis of the company, it was great, it was fantastic, and I thought that the company is still definitely on the right track. So I bought quite a big position in Alibaba. And I know you guys already know what happened is, well, the Chinese regulations comes in, right? So all the tech stock got beaten down so much, and that's how that that particular position dropped like 70%, right? Like even though it's a great company, right? And I buy it for long term, still things can happen, right? So I think from this, we get to learn that, especially for myself, I get to learn that position sizing is so important in terms of no matter how bullish you are on a particular company or a particular sector, you just want to make sure you don't over allocate too much. Because if you over allocate and if you are wrong, or what if the company situation suddenly change, and in this case it's a Chinese regulation, because of that your portfolio will be really like affected negatively. So this is how I think for myself, luckily I am at that time I invested about less than 10% of my portfolio. So even though it's 70% down, it's still like only 7% of my portfolio, right? So that's what I think about long-term investing. You want to make sure you really do position sizings, portfolio sizing, and then you also want to make sure you diversify into different great businesses or great ETFs, so that even though one or two counter actually drop, the majority of your portfolio is still intact.